Hello and welcome to Finextra at Sibos, and today I'm speaking to Ruth Wandhöfer of Citi. So Ruth, of course, I'm going to talk to you about regulations. Now, global regulations are bankers and financial services' favorite topic, but it seems the top regulation on everyone's lips this year's Sibos seems to be Dodd-Frank from the US. Can we have a discussion about why that is?
There is one regulation in the big Dodd-Frank Act which is actually impacting payments, and not only payments in the US domestically, but cross-border, and that will impact all the other banks that are dealing with US banks sending consumer payments cross-border, and that's why many people are very interested in finding out what it means and how they can cope with it together.
So of course a lot has been written about how the Dodd-Frank regulation will affect US banks, but how will it affect banks in Europe and Asia Pacific and the rest of the world?
I mean, having come from Europe, where we had already extensive conduct of business rules for payment services with the Payment Services Directive, it's interesting to examine the Regulation E in Dodd-Frank Section 1073, where actually it's all about consumer protection. So if a US customer, a consumer, makes a transfer of more than $15 cross-border to any country in the world, that transfer can be to another consumer or to a business, so it could even be a bill payment. The US bank accepting that transfer payment has to give full fee disclosure of execution time cycles, taxes, and foreign exchange rates before the transfer is made. And those are very extensive requirements to be made up front, where of course US banks need to rely on their correspondents and any bank around the world that could accept those payments as a beneficiary bank to make sure that the payment flow doesn't get deductions and people have clarity on how much will arrive with the beneficiary customer. My example is always money is being sent from the US to Kazakhstan to a business. You could have a cycle time of 3, 5, 4, 5 days. You would need to understand that in advance. You could have a foreign exchange transaction either in the US or in Kazakhstan. You will need to be able to disclose the rate to the customer before he makes the transfer. And of course you need to make sure that any taxes that may apply in Kazakhstan, because it is a bill payment, are also being factored in on the sending side so that the customer understands how much money the beneficiary will actually get. This impacts correspondent banking. And if you look around the industry, some banks may actually have to exit that sort of business because it puts so much obligation on the US consumer banks for information that they don't necessarily have. What we've heard this week is that many banks around the world have been requested for information by the US banks to understand how much they charge, how much they price. And of course some banks may say, we don't want to disclose this information because it is confidential, which is very understandable. Some jurisdictions don't even allow you to share this information. And it is a very interesting example of how the US oversteps again their territoriality with creating rules that impact everyone else. I think the biggest challenge for Sibos attendees, particularly the banking industry, is that maybe closed-loop providers such as money remitters, the traditional ones, may have a little bit of an advantage because they have a closed-loop system where the information on pricing can be given more easily up front. The bigger challenge there is the tax on the end, but it could be that some of those new providers or non-bank providers will take some of those business away. So the objective of the banking industry is to keep those flows in the banking system, whether it's regulated, rather than moving outside the banking system.
So of course you mentioned tax liability. How does this work alongside the FATCA regulation?
Well, it's a very different approach. I mean, here we want to make sure that the sending customer knows how much the beneficiary will receive. If the beneficiary owes some local tax because it's a business bill payment that he's receiving, then the transparency on the sending party is to disclose those taxes in advance and actually be able to say, beneficiary in Kazakhstan will receive $500 and not $600. FATCA, of course, is a legislation that makes sure any US citizen that has US source income anywhere around the world pays tax for that US source income, to ensure that US citizens don't evade tax, which is a slightly different approach, because this is about disclosing flows and making sure that these people are held to tax liability in their home country.